Good afternoon, everybody. This is Michael with Back to the Future Trading, and this is another episode of NinjaTrader Unplugged. I meet a lot of new traders, and by the time they buy our software, or anybody's software for that matter, they've invested a lot of money in the early development and learning phases, and a lot of customers don't realize when you get NinjaTrader, there's a plethora of tools in here. And I think the hard part for a lot of new traders is understanding how to pull things out of this free list of indicators. What NinjaTrader gives you in the way of startup tools is pretty amazing, especially relative to other platforms. I think NinjaTrader is and continues to be the best platform available for futures and Forex traders. And so I want to show you today how to build a basic system. And we're going to use two indicators here. One is a NinjaTrader tool, and one is a free tool available from our Unplugged library. And I'll give you access to that in just a second so you can download it. So first thing I'm going to do is I'm going to go up to the free indicator from our website. It's called EMA Slope Color. So when you've got that downloaded, you'll see it appearing in your indicator list right here. Go to that, and I just have a CL 1 minute chart here, and what I've done is changed the up color to lime green, the down color to red. I've made the line into a dot, and I've changed the value of the EMA to a 120 period EMA. Your mileage may vary. CL has a couple different really great moving averages. 89 EMA is a good one to try. A 50 is another one to try. 100. I think 120 works well across a lot of different markets. And when you put that on your screen, you have this really awesome tool that sort of tells you, hey, dummy, the trend is up. And most of the customers that we work with that are profitable, at least in my experience empirically, are trading in the direction of the trend. So that's usually a great place to start. Now, number two is where it gets a little weird. And I love things with Japanese sounding names. And if we scroll all the way down, you'll see an indicator here called Heiken Ashi. Just go ahead and double click on that. Don't do anything to it. And hit OK. And watch what starts to happen when I do that. Boom. Now, all of a sudden, this starts to take on the appearance of an indicator system you might pay $99 to upwards of $500 for. And I want to show you today that you don't have to shell out that kind of money in the beginning. You have some really powerful tools in the NinjaTrader suite. So a quick look online, if we kind of scour the interwebs, you'll see that there are some really great articles. This one's from stockcharts.com. And one of the patterns that they cite in their dissertation on Heiken Ashi patterns is the absence of a lower or an upper shadow as a potential indication for a strong advance or a strong decline. So I want to show you how you could apply that in the markets you're trading as a potential entry in the direction of a trend. So we're going to use the drawing tools. Get real handy with those if you have a chance. Go all the way down to your chart marker after clicking Stay in Draw Mode on True. And when you get to your chart marker, click arrow up. We're looking for signals in the direction of the trend that don't have a lower shadow. And so here, starting after 7:15, getting into the UK lunchtime, that's the first candle in the direction of the trend that doesn't have a lower shadow. It doesn't have one of these little tails underneath it. And so now you've got a way of looking at this as a possible entry. Well, ways to exit include looking for the first opposite color candle. So somewhere in here, that red candle might be a way for you to say, hey, that's as far as this thing is going to go this run. So let me bail out here. And then you're looking for the next candle that doesn't have a lower shadow, and that happens to be this one right here. Now, as you see here, entering somewhere in this area, let's say you get slipped a tick or two. As you travel up and up and up, this is the very first candle here that doesn't have a green body to it. And in this case, you can see we've developed two entries based off of a Heiken Ashi candle pattern, and coupling that in the direction of the trend gives us some really good leverage in terms of developing an edge. In terms of stops, you may consider a stop 1 or 2 ticks below the body of the candle that you're using as an entry. So in each of those cases, if you drop it down 2 ticks underneath, you can sort of see where your stop is. General rule of thumb, if you're just starting out in trading, try to go for at least twice what you're risking. 1.5 to 2 times what your risk is. And that develops a healthy money management program over time. Okay, so now as we move forward, I just want you to see a few more examples. Here's the next Heiken Ashi candle without a shadow, and that one is a great example of a stop out. That gets taken out right here. The very next entry to the right side of that with no shadow is this one right here. And again, risk would be 2 ticks underneath the low of the body of that candle. Your mileage may vary. Whatever your penchant is for risk and what kinds of targets you're going for will help determine that. And you'll see here the very next place you're looking to get out is at the first red candle. So this is a really great strategy. You can use this on any market. Your mileage may vary with range bars or Renko bars. If you want to try with those, it might smooth out the price action some. But as a way to get started, this exemplifies 3 principles that you don't need anybody else to teach you. You just need a couple tools, most of which are in your NinjaTrader indicator suite. Use an EMA or an SMA to determine the local trend. Use the Heiken Ashi and look for evidence of strong up movements with candles that have no wicks below, or in the case of this chart, you'll see evidence of candles in the downtrend that don't have an upper wick or an upper shadow. When you are trading a trend system like this, expect a win ratio to be somewhere around the 50% mark, 45 to 50%. And that means you're going to lose about 6 out of 10 times, 5 out of 10 times, but your winners are hopefully following these money management protocols about twice as big as your losers. So that pans out over time, especially if you're following a trend-based entry system. So let me show you how to get the EMA slope color and get you on your way to creating your own charts. Head on over to our web link here. It's backtothefuturetrading.com/unplugged. And scroll down, you'll see there's a place for you to put your name and email address. When you do that, we're going to send you a link to our Dropbox account. When you get there, there's going to be a folder called NinjaTrader Unplugged. And inside of that folder is going to be the indicator here, EMA slope color, along with a whole bunch of other templates and indicators from our past videos that you're more than welcome to download and use for yourself as you're learning to become a seasoned futures or Forex trader. Click on it, make sure you download it, and then install it like you would any other indicator in NinjaTrader. For more information about our website and how we're the only indicator company in the world for retail traders who can predict when the banks are about to buy or sell out 5 days into the future to the minute, go ahead to our website, backtothefuturetrading.com. Go ahead and click on where it says View Demo, and just let us know, are you a futures trader, a Forex trader, or an equities trader? And we'll be happy to send you our training materials and get you started on your path to uncovering the highest probability bank trading times for the upcoming sessions of your market. I'm Michael with Back to the Future Trading. It's a privilege and an honor to be part of the NinjaTrader ecosystem and the community. If you have any questions, shoot me an email. I'd be happy to help you. Be careful out there. Remember, the market you trade is not random. And good trading, everyone. Bye now.